An ample degree of monetary stimulus remains necessary. ECB Bulletin. The ECB's latest bulletin was published by its Governing Council following its monetary policy meeting earlier this month. This stated that an ample degree of monetary stimulus remains necessary for underlying inflation pressures to continue to build up and support headline inflation developments over the medium term. The bulletin reiterated that the ECB, based in Frankfurt, intends to make net purchases at the current monthly rate of €30 billion until the end of September 2018, or even more if necessary, and until it finds a lasting adjustment to price developments consistent with its inflation target. It also noted a growth in the solid Eurozone and inflation rates that should fluctuate around 1.5% for the rest of the year. GETTYThe European Central Bank has said the Eurozone needs a massive injection of cash. GETTYThe Eurozone covers all 27 countries which have the euro as their main currency. Bulletin added, the information that has become available since the previous monetary policy meeting in January, including the new ECB staff projections, confirmed a strong and broad-based growth momentum in the euro area economy, which is projected to expand in the near term at a somewhat faster pace than previously expected. This outlook for growth confirmed the Governing Council's confidence that inflation will converge towards the inflation aim of below, but close to, 2% over the medium term. At the same time, measures of underlying inflation remain subdued and have yet to show convincing signs of a sustained upward trend. In this context, the Governing Council will continue monitoring developments in the exchange rate and financial conditions with regard to their possible implications for the medium-term outlook for price stability. The continued monetary support required for a sustained return of inflation rates towards levels that are below, but close to, 2%, is provided by the ongoing net asset purchases by the sizable stock of acquired assets and the forthcoming reinvestments, and by the forward guidance on interest rates. According to ACU estimates, inflation in the Eurozone fell to 1.2% in February, from 1.3% in January. The bulletin stated, this reflected mainly negative base effects in unprocessed food price inflation. Looking ahead, on the basis of current futures prices for oil, annual rates of headline inflation are likely to hover around 1.5% for the remainder of the year. Measures of underlying inflation remain subdued, but are expected to rise gradually over the medium term, supported by the ECB's monetary policy measures, the continuing economic expansion, the corresponding absorption of economic slack and rising wage growth. On Friday, the ECB said it had raised a cap on how many bonds it can lend to investors against cash boosting, a tool that has helped ease a drought in sought-after government paper. The ECB is now prepared to lend out government bonds bought as part of its stimulus program against collateral worth up to €75 billion, $93 billion, up from €50 billion previously. Additional reporting by Maria Ortega.